It's September 29th, and this is, of course, the video log. It takes 30,000 to a million. And today, I'm going to spice it up a little bit. I'm going to start a new trend, I think. And after I take you through the account and review some of the positions and see my progress or whatever, how the account is doing, I think I'm just going to mention one company and what I think about it. I've already said, I've made so many episodes about my philosophy on trading, my philosophy on investing, etc., and all these life lessons that I've kind of learned as I go along in the last maybe 15-20 years of investing and competing in sports and things like that. So perhaps I'm running out of the material. Maybe as I think of more things to share, I will. But in the meantime, instead of just doing an account review, I'm gonna just mention a stock and my opinion on it, what I think about it, just a quick glance on whether or not I've done a more thorough kind of investigation. Okay, I'll look into the company. So just a company that I want to maybe talk about today is AT&T, and just have a few remarks about it. But first, let's go into the account and I'll show you what is going on. Oh, this is Ford Motors, totally unprepared, but I'm not doing redos and no edits, all right, because no time. Who's got the time for that? Okay, so I'm sitting at almost 118,000, which is higher than I think I was last time at the making of the video. And excuse me for a moment. Okay, so here are the options positions, and you can see the ticker, you can see the strike price, whether it's a put or a call, the expiration date, whether it's a seller or a buy, and the number of contracts here. All the relevant information is mentioned. And so I'm just going to quickly scroll through. You can feel free to pause your video at any moment in order to figure out exactly what my positions are. I have a ton of contracts that I've sold, more than 60 I think, and of course I have 3 buys here on Apple, and here are the actual holdings. I've accumulated some shares of Mains, and then I'm trying to buy Russian markets at the moment. If it stays below 21, I'll be buying some RSX, and then I have sold some calls against my energy fuels position, and then I'm playing chemical as always. I've been playing this for the last 2 years, and so I also have a few more shares of DEM, and I think I'm actually going to be buying DEM, which is the emerging markets high dividend yield exchange traded fund. And if I'm not mistaken, I have a put at 36 and it's at 34.90 right now. So if it stays around the same price, I'll be buying this in about 2 weeks. But you never know, a lot changes in a couple of weeks and the markets could be higher. I really like the price to earnings ratio of this fund, which is about 9, and the dividend's about 5.33. So even if I buy this with borrowed money, which I'm probably going to be buying it with borrowed money, the interest on the loan, I guess you could call it, on the margin, is going to be covered by the dividend of the stock. And if I sell a call against it, then I'll be actually making a little bit of profit on top, after tax, etc. So, should be cool. We'll see. You can see that previously this paid me almost $100 in dividend in September 25th, so a few days ago. And yeah, these kind of funds also usually give another big dividend around New Year's. So we'll see what happens and when their next ex-dividend date is. I haven't looked it up. They probably haven't even announced it yet, so because we just had this dividend, right? But those are some of the plays that I'm doing here, and let's see what else is interesting and worth mentioning. Oh yeah, Schlumberger. Okay, so I bought some. My puts actually turned into a 200 share position of Schlumberger, and I really want to get heavy into oil and gas here. I really want it. I mean, just the valuations, the value that I see, it's really, the price of oil has been sitting low for so long now, over 6 months, and before that it was in a downtrend anyway, so there was already like the start of some supply destruction, and now there's probably going to be even more supply destruction because the prices are so low, it's not worth producing, right? So I think it might even grind lower for the next year or two, but eventually it's going to come right back up, and the producers just aren't going to be ready for it. And I think that with higher oil prices, obviously some of these companies, especially this one, is going to really benefit. So of course I'm going to be selling calls against it. Here I've already sold the calls actually, $20. But considering I bought it at 18, if I sell at 20, then I'll have, you know, like a $400 or something profit, plus if I get any dividends in the process. And if this expires, I will probably re-roll calls depending on the current price. And then I have another put that I've sold against this at 17.5 strike price, so I'll be getting even another 100 shares if things stay like this down below 17.5. And I really don't mind owning this company. Like, I'm going to be getting some fat dividends. I mean, I'm just really accumulating these kind of value stocks, like really big on, you know, commercial real estate and oil right now. I'm just trying to accumulate as much as I can. And pretty soon I might be getting into the finance sector, right? I mean, I still think they might have some ways down to go. They're kind of tied at the hip a little bit with the, you know, oil and real estate together. They have this little virtuous cycle going on right now, and right now it's not very virtuous, right? It's going in the opposite direction. But I think when things come down and we bottom out and we hit some despair among the investors, and we'll see a turnaround in price action. So that's the account. If you want to see the account tab just for entertainment purposes, this is it. Have a total of $123,000 worth of assets because I'm already $5,000 in margin, which is about 4.4%. So nothing too scary as of yet. I'm not looking for a big crash. If it does happen, I'll be in trouble, but the stocks that I'm buying are already so undervalued, like it's hard to imagine they're going to go too much further down. I think the floor is pretty close. So even if we have another downturn, maybe around the election, I think that once the election resolves itself, the uncertainty will clear a little bit, and once investors figure out what to make of it, I think that markets overall will rebound relative to the dollar. Okay, so AT&T. All right, this is AT&T here. I was looking at it earlier. This is going to be my stock that I want to mention, okay, for today. And I'm going to give it like a typical, I haven't even figured out my rating system. I don't have a rating system, but I'm going to give it a typical like sell, hold, or buy, and where I stand on this. So let's take a look at some of the FinViz. All right, quick overview. Obviously this is not detailed, it doesn't show you any trends or anything like that, but I think it's good enough to kind of get an overall opinion, and then plus where I might think the company's headed. So of course I'm not a professional at this, so take my opinion with a grain of salt. Always invest, you know, if you're not sure what you're doing, consult a professional investment professional, and just know that you could lose 100% of your principal when you're investing in stocks. So it's very risky, and you gotta be careful. And this is of course not financial advice at all. It's for entertainment purposes, and if you find some education, you're lucky. So okay, so here's the company, the stats. What I'm seeing here is, I think the left side is going to be cut out a little bit, but oh, it's not. That's good. What I'm seeing here is a market cap of 200 billion. It made 11.9 billion. So the price to earnings ratio currently is about 17, which is about standard. Forward PE is about 8 because they expect the company to rebound and start making some more money soon. Other factors, other things I look at here is of course the dividend, which is 7.33%, and the payout ratio right afterwards, which is 1.25, which means recently anyways, they have paid out more money in dividend than they've been able to collect, right, which is bad. But if the earnings do increase double, then this comes under 100%, you know, at about 62.5. But that's still high. Okay, that's still a high payout ratio. It's not extremely sustainable. AT&T is known to have a high dividend though relative to their earnings, so that's not surprising. But because of this recent instability, it seems like that it's taken a bit of a dip here, and price action, it hasn't really recovered to the levels it was pre-virus crash. So it's taking it on the chin right now. Things that concern me are, return on asset, return on equity, and return on investment. They're pretty average, in fact, kind of low in my book, and their margins are all right. So, and of course, this recent performance is probably not going to be the same as when things kind of go back to normal. So we'll see. But as of right now, because of these numbers, another thing you could watch is insider ownership, which is 0.08%, and how much of the institutional owned, what percentage is institution owned, and also the short float. I like to watch the short float and short ratio. This isn't too bad. It's 1.69% short float and a ratio of 3.62. So the company's not shorted a lot. It means it doesn't really mean that much. It just means that what some traders expect it to do in the future, right? Like a company like Tesla, it's shorted a lot more, right? So having said that, here's something that I really noticed about this company, right? And in recent trends, 243,000 employees. Like, that's a lot of employees. Okay, that's a lot. I mean, nowadays, right, firms are trying to get rid of employees because they just such big overhead. I mean, it's so tough. Like, this company has to be training employees as it progresses and letting them do some other kind of work, because they will not be able to compete. I mean, the thing is, the business is really lucrative because, right, they're providing basically internet service, right, cellular data, whatever, everything that's connected to that, internet and phones. But and that's kind of the future. But the problem is they're just spending so much money on employees, and I think it's going to drag them down. They're going to have to shed employees, and they're not going to shed them because they want to shed them. They're going to shed them because they have to. They cost them too much money, and they're getting outcompeted. So for that reason, I'm out. For that reason, I wouldn't buy this company. Right? Is it going to have a bounce here? Yeah, of course. I mean, it's a really low levels. Of course, it's going to get a bounce, and it's probably worth holding over the next 10 years. You might get your money back through dividends, and then if you sell, you might be at even or a little bit higher. But I don't want to count on that. All right, I just think that it's going to get outcompeted. It's going to get, pressure to shed employees because its margins are going to shrink. Let me see just a competitor real quick. I actually haven't looked at Verizon. VZ. I don't even know the symbol off the top of my head. Well, Verizon's done a lot better. Okay, and if you look at the numbers here, they have, look at the employees, only 135,000 in comparison, and they're a bigger company. All right, do you see what I mean here? Like, they're also paying out less dividend, and the payout ratio is only 52.9%. So this is a steal compared to AT&T and the risks that it carries. Like, if I had to choose between AT&T and Verizon, I would definitely choose Verizon at this point. Look at the margins, the return on investment, equity and asset, it's great. Margins are fantastic. Look at this. Actually, I should probably buy some Verizon. I mean, that's crazy. So much better than AT&T. Now, I mean, that's not to say that it's going to do better over time, but if I had to pick one horse and what would return more money in 10 years from this price point, I would definitely say that Verizon would. And price to earnings about 12, which is more expensive than AT&T, but I think because of its sustainability, it's going to have a better future. So, back on topic here, what I think about AT&T. I can't even get a straight answer. I wouldn't say sell. I wouldn't say hold. I'd just say don't buy. Or if you had to buy some telecom, just do Verizon or something. You know, there's just, I think it's just not the number one pick in its sector. So if you already own it and love the dividend, like, fine. I don't think that you're going to be losing a lot of money in the next 10 years. You're probably going to break even or even make some, but I just don't think it's going to be the best company in its sector. That's my verdict. All right, hopefully you all enjoy it. Let me know if you have some AT&T. I'd be interested in what you think about it. Are you religious about it? Do you want to sell it? Are you going to switch to Verizon? All right. Well, let me know. Okay, peace out.